Okay, problem 14.1a asks us to look at a bunch of facts for this drum manufacturer and determine if these costs are fixed or variable, and if they're product cost or period cost. So just to help make it a little clearer, I'm going to put a line right down the middle. So, plastic for casing. Well, will that vary with the more drums we use? I think so. So that would be 17,000, and that would be variable. And will that be a product cost? Will that go into the product, or will that go into the period? Well, that goes into the product. That's what it's made out of. Then they tell us the wages of assembly workers. Well, again, you need to think about what are they assembling. They're assembling our product, and the more time they use, the more money we're going to spend. So that $82,000 is variable, and it's product because what the assembly workers are assembling is our drums. The next they tell us is property taxes on the factory. Do they have any relationship to the number of drums we make? Could we, for example, not make any drums and not have any property taxes? Of course not. So that's a fixed cost. We're going to have that no matter what. But because it's on the factory, it is a product cost. It is not a period cost. And now the next they tell us, what about the accounting staff? $35,000. Take it from me, I'm an accountant. We're pretty useless human beings. We don't make stuff. So our cost would clearly be a period cost, an income statement cost. And our costs are not determined by the number of drums we produce, but the amount of accounting work we do. So with regard to drums, that would be a fixed cost. Now, there's an example of a cost that could change. Suppose we were looking at office expense. Then the amount of accounting hours would be variable. Drum stands. Again, with this, I just need you to use some common sense. The more drums we make, do we need more stands to put them on? Of course we do. So that would be a variable cost, and it would obviously be a product cost. Okay, the rent costs of equipment for the sales staff. These are the people who are going out and selling our drums. Are they making the drums? Are they paid by the drum, or are they paid a salary? Well, rent would be a salary type expense. It wouldn't go up or down with volume. Volume as in production volume, not in loudness of the drums. So the rent cost for the equipment for the sales staff, that's a fixed cost. And it is a period cost, because rent gets paid at the end of each month. Here you need to focus on this. Upper management salaries. Upper management, they get paid by the company for running the company. This is an entity sustaining cost. So that $125,000 would be a fixed cost, and it would be a period cost. Got to move my sheet up a little bit so you can see the rest. Okay, now we have the annual flat fee for factory maintenance. Flat fee. That's screaming fixed cost. Now it's factory maintenance. So that would be added to the product. That's a product cost. Now, if it said something like it was split half and half between the factory and the warehouse, or the factory and the office, we would handle it differently. It would still be fixed, but some would be product, some would be period. Sales commission, and the word you're looking for there is per unit. That screams variable cost. It's $15 times each unit. And the selling costs are always period costs. Selling costs are never product costs. And our last cost is machinery depreciation. That's a fixed cost, because the machinery is going to get older and wear out, even if it just sits there, but it is related to the product. That's a pretty good example of classifying various costs and assigning them. Now, the next part, 14.1b, the second part, part 2, asks us to take that information and determine how much it's going to cost us to make one drum. So, let's get it on. The variable production costs, we said, included the plastic for the housing. We said included the wages for the assembly worker, and we included the drum. So it cost us those amounts to make 1,000 units, because they give us that. They tell us it's 1,000 units. So our variable cost for plastic was $17,000 for 1,000 units. So that's $17 per unit. The wages of the assembly workers for 1,000 units was $82,000. So that's $82 per drum. That's what we pay our workers to make the drum. The drum stands were $26,000 for 1,000 of them. So it's $26 per drum. So when we add that together, our total variable production costs are $125. But we still have these costs. We can't just say, oh, well, never mind. So our property taxes on the factory were $5,000. We're estimating, we're allocating, we're saying, well, it cost us $5,000 to pay the taxes on the factory. We made 1,000, so that's roughly $5 per drum. This is the definition of fixed cost. It stays constant in total, but varies at the unit level. So if we had made 20,000 or 2,000 drums, the cost would have been $2.50. If we made 25,000 drums, it would have been 50 cents. That's the concept of variable cost. Stays constant in total, varies at the unit level. Now, the annual fee for the maintenance is $10,000. Remember we got that? And we said that was a product cost. So we have to take that, divide by 1,000, $10. And now the machinery depreciation, we said was $40,000, and that was for 1,000 drums, so that's $40 per drum. So we are allocating $55 of fixed production cost. These are allocations. These are not actual costs. We didn't actually pay $5 for each drum for property taxes. We paid $5,000 for the year. That works out to be about $5 per drum. These are all allocated costs. Our total cost is the sum of those two, and that's $180. That's our total per drum, $180 per drum. Now let's see what else these guys are asking us to do. they're asking us to consider a couple of questions. They want to know, if more drums are produced, are we going to spend more money? Well, duh. We would expect to spend more. If it's $17 per drum, and we make an additional 1,200 drums, 17 times 1,200, $20,400. But the cost per unit will still stay at $17 per drum. Per drum. Each drum has $17 worth of plastic, but the more drums we make, the more plastic we use. The unit cost remains constant. It varies in total. Now, the next piece it's going to ask us in part 4, it's saying, what's going to happen if we make more drums? What's going to happen with the property tax? Well, the property taxes are going to still stay at $5,000. They're fixed costs. So they're going to be $5,000 in total. And that's the important word, in total. However, the cost will decrease because we're now making 6,200 drums instead of, or what did you make? We're making an additional 200 drums. So we're making 1,200 drums instead of 1,000. So we're going to take our 5,000, divide by 1,200, and the cost per drum goes to $417. So fixed costs vary at the unit level, stay constant in total. Problem 14-1A, parts 1, 2, 3, and 4.